Let's take a look at some charts on Decred for this week's article on Brave New Coin. So a lot of Bitcoin maximalists like Decred because of its proof of work aspects. Decred is semi-unique amongst a lot of coins in that it has both proof of work and proof of stake. The thought there being each one has its own unique flaws and potential exploits. So using both has a way to shore up the weaknesses. Dash is another chain that also uses a very similar system, hybrid proof of work, proof of stake. Now, you can argue whether Dash has actual proof of stake, but for the purposes of this exercise, I will be comparing them directly together, as I like to compare many coins directly together. There's a lot of coins, and there's a lot of similar aspects to most of them, so it's just good to compare winners and losers here. Does DCR have more potential than Dash because it is seeing a lot of on-chain activity right now? Can you evaluate either of them properly because they have a lot of coin mixing and that'll inflate things like active addresses, transactions per day, and other ancillary on-chain metrics? Things to think about. So in general, DCR is behind Dash in mostly everything except GitHub commits. It's pretty even. Well, it's near even on that. Looking at their governance side, they released this in October 2018, I think. Polyatia, however you pronounce that. Basically, they have ways of voting for marketing proposals, governance proposals, budgets, that sort of thing. I think it's interesting. I think it's cool. It gives the coins a job. It gives the community a job other than just holding and hoping the number goes up. People are invested in the community, and it keeps people interested. So from that aspect, I like it. Whether or not it makes the coin, the treasury specifically, whether or not it classifies the coin as a security under US law, I don't know. I found it interesting. If you check the CRC, Crypto Whatever Research Council or something, that got released many months ago at this point, a bunch of exchanges went through a bunch of coins and they said, is this a security? And they gave it a ranking. Dash has the lowest ranking, even though it's very similar to DCR. I'm just wondering why DCR isn't listed on more exchanges. If DCR gets a Coinbase listing, which it may in the future, or many other exchange listings, I think that'll be extremely bullish for price from a speculative standpoint. So the proof of stake side, people can buy tickets. Those tickets adjust in price based on supply and demand. So they have their own market. And you can see over the past 6 odd months, it's essentially been flat, ranging pretty heavily, but pretty flat. If you look at mining difficulty, slightly down, but overall, not too exciting, mostly flat. Same thing with hash rate. It's mostly flat over the past year. If you look at the hash rate distribution, this is where things get a little iffy. I don't know the snapshot for this, if it's like the past day, the past week, the past month, but seeing a pool of 50% of the hash rate, seeing two pools with 70% of the hash rate, not great from a decentralization point of view. Now, if they were purely proof of stake and this happened, they'd be at a high risk for a 51% attack, or a continuous 51% attack, or a chain split, or whatever you want to call it. Because they're both proof of work and proof of stake, the likelihood of that probably goes down, but I still think the risk is there to manipulate or mess with transactions in some way on the proof of work side. Hopefully some DCR people are watching this and will let me know in the comments if that's the case. Looking at the proof of work ASICs, Blake 256R14 is the algorithm. Most of the ASICs are not in profit right now, which is probably why only the most efficient miners in Asia, I think this is a Chinese pool.cn, are basically benefiting from return on investment right now. So it's very possible that because profitability dropped way down on the recent price drop, any hobbyist or anyone with electricity costs greater than 4 cents per kilowatt hour is just shutting their miner off and saying, I'm going to wait this out until prices go back up again. Now, I don't really know the mindset of the Blake 256R14 hobbyist miners, but that's one thing to consider, or how many of them even exist. I do know the solo miner pool, or the slice, was like 22% 2 months ago, and it's way down now. So I don't know if there's just more people switching over to this pool or less solo miners. There's some interesting game theory going on there. Looking at transactions and average transaction values. So transactions per day are in the line here. And you can see in general, it's just been a downtrend since all-time high. Not something you want to see if you're bullish, certainly. Average transaction values are down, to multi-year lows essentially. Again, not something you necessarily want to see, especially on a non-DApp platform. They do have like a DEX thing that I couldn't find any stats on, so I don't even know if that's being used exactly. But if it's a DEX or a DApp platform, you'd expect average transaction values to go to zero over time or to decrease over time, just because they're sending data and not necessarily currency value. So in general, I don't really value the average transaction values too much when I'm looking at like bullish or bearish things, but to see transactions per day go to multi-year lows, arguably 5-year lows, that's not what you want to see if you're bullish. On the other hand of that, completely 180, is you have NVT, which is the line here, an inverse metric of economic utility, at an all-time low, which is extremely bullish in a vacuum. You have active addresses, monthly active addresses, at an all-time high, extremely bullish in a vacuum. Again, I don't know how much of this is related to the DEX, the mixing service, privacy stuff. So it's hard to compare pre-August 2019 to post-August 2019. I think you're going to need 6 months to a year more of data to really see like what the new normal is, because clearly, the chain is a different chain after they release these new features. So it's difficult to actually compare last year, 2 years ago to now, because it's just different, especially with active addresses. Much different picture overall. But together, it's very bullish in a vacuum. All right, let's take a look at some technicals. We have VPVR, which is volume profile of the visible range at the specific price or node. We have volume per day here. We have yearly pivots, 5200 EMA, and RSI, which is an oscillator I use to look for extreme highs or extreme lows in price, as well as divergences. So there's no divergences here, but just like every other coin on March 12th, March 13th, we hit a multi-month, arguably multi-year low on RSI. Always a good sign for capitulation and or bearish exhaustion, oversold territory. Looking at the yearly pivots, it actually hit the S1. So these are determined by math of the previous year's highs and lows. I always like to leave these on the chart at all times because you never know when you're going to have insane volatility and having bids or asks at specific levels that you wouldn't otherwise look at. There's no price history down here really other than 2017, but you get a good idea where this might stop based on things like VPVR, based on the pivots, that sort of thing. 5200 cross remains bearish. It didn't actually cross bullish recently, even though most other coins did. You can see there's a bit of a volume resistance node to the upside here. So it's going to have a fight. It's fighting EMAs. It's fighting volume. It had this Adam and Eve that looked like it was just about to go off, and then the whole market started tanking. Here's the V. Here's the U. It was right at that horizontal resistance, and it was a slave to the rest of the market and just fell with everything else. Again, you're seeing a pseudo Adam and Eve here, double bottom thing, just like most other charts on the USD pair. But to the upside, you're looking at resistance at 16, resistance at 20, psychological resistance, yearly pivot at 22, volume resistance from 22 to 32, yearly pivot at 32. So it's going to need a lot of bullish momentum to get through all of that. Looking at the cloud, just like everything else, if we put in a range and do not make a higher high, do not make a lower low, cloud will print a 50% retracement at the flat Kumo, the Kijun here, which is around 1636, just the previous range essentially as well. Again, you can see all these, it's better on the line graph. I like to use the line graph when I'm looking for chart patterns. So you can see Adam, Eve here, Adam, Eve, Adam, Eve. So when you see this bullish Kumo breakout, it had everything. It checked all the boxes, had the confluence, was ready to go, but the entire market just didn't want it to happen. But that's what you want to look for. You want to see chart patterns into edge-to-edge trades, into Kumo breakouts, or you want to see chart patterns into Kumo breakouts. You want to see just stacking bullish confluence if you're looking for longs. So this was a great setup, but this is why you use stop losses. This is why you don't go all in on every chart pattern you see, but this is exactly the type of thing you want to see. And lastly, looking at DCR BTC, same stuff, VPVR, volume, oscillators, yearly pivots, cloud, EMAs. First thing I noticed was, the potential Adam and Eve thing, where you get this VU. Actually had started to U out here with the bullish cooling breakout, with breaking the 200. Didn't happen, went lower. Okay, fine. So if this doesn't make a lower low, I actually really like the cred over the next 6 to 12 months, because there's just been so many attempts to go to zero, and it just doesn't want to. Just doesn't want to go lower. If it does break lows, if it does break this low, whatever this is, 0016 or something, I don't know. Whatever that is, if it does break that low, then it's in trouble, certainly. It's definitely teetering, but what really sold me on the possibility of an up move this year or next year, 6 to 12 months, 6 to 18 months, is the fact that it's been in a bearish trend for over 600 days. So to see that with on-chain stuff pretty vibrant, you want to see the uptick in transactions per day, but active addresses look pretty good. You want to see more exchange listings. You want to see more proof of stake stuff. I want to see some controversy or something with the proof of work, something to get people's attention into this market, because there are enough maximalists who are already in DCR who really like the community and the coin and everything it stands for, blah, blah, blah. So those are all things to watch if you're looking at this Adam and Eve. I think the fundamentals, just because it's been bearish for so long, are super important here, because that'll be a nice way for this to actually reverse to the upside. No bullish divergence here, because there wasn't a lower low in price. This low was lower than this low, even though this RSI is higher. So there's no any types of divergences here. But what I'd be looking for over the next 6 months is a move through the cloud, through the 200. You can see it tried here. It got denied, just like everything else did at that point. It's really only had 2 or 3 touches of the 200 in the past 600 days. Another reason why eventually people just get sick of selling something, and people are like, this hasn't pumped in a while. This number hasn't gone up in a while. And then you get this snowball effect of speculators, and people start talking about it on Twitter, and the community gets hyped, and more people look into the coin, that sort of thing. So this is all stuff to consider. And then lastly, the VPVR zone, massive at 0026. So there's massive resistance to the upside here. Another reason why, if it does complete this Adam Eve, if it does break 0026, if it does reach this yearly pivot, it's likely going 004 or 0045, something like that. This previous accumulation zone, these previous lows, as well as previous all-time high zone. So it's got a lot of baggage on the way up. But it's just been dead for so long that I think it has a good chance over the next 6 to 12 months.